Hi everyone. Today I want to talk about Facebook. I will start with Facebook's price action before I go over the qualitative analysis. As usual, I will start with the bull case, with Facebook having a price target of around $400 per share. And they also mention that multiple analysts have increased their price targets recently. Then I'll talk about what has made Facebook so successful in the first half of 2020. They talk about how their ad revenue jumped 17% year over year, and how they continue to improve their margins. Next, I will go over the bear case. They ask, does Facebook have near-term upside? Due to the extremely strong rally from $148 to $245, does Facebook have upside left? They don't think so. Also, we can't talk about Facebook without talking about the current ad boycott going on right now. They say that the boycotts have cost Facebook almost $200 million in Q1, or somewhere around 1%. And then lastly, I will go over the Morningstar report for Facebook. Currently, they give them a 3-star evaluation, meaning that they think they are fairly valued. I'll go over what they think of the bull and bear cases, and then I'll finish up with their price predictions. As always, there will be some jelly at the end, which is something I enjoyed outside of the markets. If you have big dreams like buying this 1965 Mustang GT350R owned by Ken Miles, or if you're just getting started on your financial journey, definitely like and subscribe. You can tell that this car is special by the enlarged radiator, as well as the piece missing from the front bumper. It's also got this weird piece missing from the top of the rear window. It had over 300 horsepower in 1965 because this car was one of the first Shelby Mustangs ever made, and it was raced by Ken Miles. It recently sold for $3.85 million. To keep your dreams at the front of your mind, like and subscribe. Welcome to the Portfolio Bulletin. Let's get started. Looking at Facebook price action, you can see just after IPO, it was selling for around $21 per share. And most recently, it was selling for over $242 per share. If you were buying at the lows in March, the price was around $150 per share. And since then, it's eclipsed its all-time highs, around $222, all the way up to that $240 per share. So as you can tell, Facebook has been growing at a rapid rate. Moving on to the first article of the day, can Facebook rally another 65% to hit $400 per share? They say there's a new biggest Facebook bull on Wall Street, with Rosenblatt Securities upping their price target to $315 from $244 on Tuesday, which is well above the average $255 price target. The firm says revised revenue estimates was the catalyst for the increase, but Todd Gordon, the managing director of Accent Wealth Partners, said the charts indicate an even bigger upside move. They said they are looking for resistance to come into play around $400 per share. This resistance at $400 implies more than a 65% move to the upside. So based on this long-term price action, like I was showing at the beginning of the video, you can see in July of 2012, we have that $21 a share that I was talking about. Currently, we are at $240-ish per share, and they are showing an upside boundary of around $400 per share. Gordon goes on to talk about how Facebook is the best in its brand, including Facebook itself as well as Instagram. He says that their ad targeting is the best in the industry, and that while there are some boycotts that are acting as an overhang, they don't diminish the long-term story. He also says that it's trading at 33% forward earnings on a 20% growth rate, which they don't feel is overvalued. The managing director of FX Strategy said that Facebook could join another tech company in dominating social media. He says you really have a duopoly between Google and Facebook, simply because both of those companies are the new version of broadcast TV. They have a rare combination of having a mass audience as well as micro-targeting, which is absolutely unbeatable. Currently, Google's YouTube draws more than 2 billion users each month, according to the parent company Alphabet. And these users watch more than 1 billion hours of video a day. He finishes off by saying there's absolutely no beating Facebook and Google as far as their monopoly power goes and their pricing power goes going forward. Moving on to the next article, why Facebook shares have gained 10.6% over the first half of 2020. They say the social media behemoth has been relatively unaffected by the Rona, and its share price has reached all-time highs. They say Facebook continues to stay on a strong track by delivering strong first quarter earnings. Advertising revenue jumped 17% year over year to $17.4 billion, and costs and expenses inched up only 1% year over year, which leads to an operating income of 78% higher year over year, which doubled its net income from $2.4 billion to $4.9 billion. Their daily active users were up 11%, and their monthly active users was up 9.6%. And they also increased average revenue per user from $6.42 to $6.95. Part of this is because the Rona is increasing Facebook engagement during the forced lockdowns. CEO Mark Zuckerberg mentioned that they reached 3 billion active users, which is getting pretty close to half of the 7.5 billion people alive today. They also mentioned that this number includes Facebook, Instagram, WhatsApp, and Messenger each month, and they saw a 50% increase in areas that were hit by the Rona. Zuckerberg did warn that the spike in engagement may only be temporary due to the circumstances and may subside once the Rona passes. They also mention here that Facebook could be negatively impacted by the current boycott, stating that many major brands have temporarily halted their ad purchasing due to the inability or unwillingness to root out hate or disinformation on the site. However, Facebook is actively engaging with these advertisers in talks to break the impasse, but so far this has not been successful. Moving on to the first bear case article. It says, after a 65% rise from the lows on March 23rd, the current price is right around $245 per share, and they believe that Facebook stock has no upside left. The stock has increased from $148 to $245 off the recent bottom, better than the S&P 500 by around 45%. They go on to say that Facebook invested $5.7 billion in Reliance Jio for 10% stake in the giant telecom company. They say this could help them participate in the untapped Indian market with regards to various services. They then reiterate the fact that some advertisers have stopped advertising on the platform due to the request for policy changes, and that the stock fell on June 26 due to the stop in advertisers. They also don't expect to see a massive hit to revenue due to the boycotts. They finish by saying the stock is currently 39% above the level at which it finished 2017, and it has already passed its pre-COVID high of $217, and they believe the stock has little upside left. Getting into the last article here, let's take a look at these boycotts. It says over 250 major companies have joined in the boycott, and it's currently backed by the NAACP, the Anti-Defamation League, and other groups. Notable companies participating are Starbucks, Microsoft, Adidas, Patagonia, Ford, and Verizon Wireless. On the day that Unilever joined the boycott, the stock dropped 8%, hitting a low of $215 per share, but 1 month later it was at $235, and it hit an all-time high of $250 per share despite the boycotts. There are various estimates that have pegged the ad revenue loss at around $200 million, which is barely 1% of Facebook's $17 billion in ad revenue in Q1 of 2020. The company had $70 billion in revenue in 2019. Mark Zuckerberg held a town hall stating that they will not change any of their policies because of a threat of lost revenue. He also says most of these advertisers will be back soon enough. They mention that Zuckerberg's comments seem rather dismissive. However, most analysts agree with him. Brent Hill of Jefferies said that all of these companies are coming back. They'll stand out in the short term, but they're all going to come back. He also mentions that Facebook has done a lot for small businesses and states that 160 million of them use Facebook every single day. Therefore, it doesn't matter if big companies like Patagonia and Disney leave, because millions of small businesses realize that they can find community on Facebook. Then reiterating the fact that this is not a fundamental risk and they still have a buy with a price target of $285 per share. They also mention the fact that Disney did not announce their participation in the boycott and that it's more likely that Disney is just cutting its advertising budget due to the Rona. Disney did not comment on the journal's report, but Facebook did. They stated that they invest billions of dollars each year in keeping our community safe and continuously work with outside experts to review and update their policies. Looking at the Morningstar report, Facebook is currently rated 3 stars, with a current fair value estimate of $245 per share, which means they think it is fairly valued right now. Moving on to the Morningstar bull case, they say with more users than ever before, Facebook provides the largest audience and most valuable data for social network online advertising. They say ad revenue continues to grow, and the application of AI technology to Facebook's various offerings, along with the launch of VR products, will increase engagement, driving further growth and increased advertising. The bears say Facebook is currently a one-trick pony, and that it will be severely affected if online advertising no longer grows and if more dollars are shifted to others like Google or Snapchat. Despite rapid user growth, many Facebook customers may belong to other social network sites like Snapchat or TikTok, so the firm will have to continue to fight to capture users' time and engagement with Facebook properties. Lastly, regulations could emerge that limit the application and collection of user data or restrict acquisitions. Taking a quick look at their financials, their revenues have increased by double digits since 2015. However, their current year is a little bit at risk due to the Rona. In terms of net income, you see similar trends. 2016, almost 100% increase. However, in 2019, they did see a decrease in net revenues. Looking at Morningstar's price predictions, they currently predict a share price of $256 per share. So they do see a little bit of upside potential, but not very much. It's basically fairly valued, and I would tend to agree with this point. In summary, I am pretty neutral on Facebook. If I plan to buy this stock for the next 10 years or so, I think there's no arguing that Facebook will be worth more in the future. But in terms of the short term, I would wait for a better buying opportunity. Let me know down in the comments section what you think of Facebook. Definitely like and subscribe if you got any value out of this video. Of course, this is all for entertainment purposes, and I am not a financial advisor. And with that, let's get to the jelly. So today's jelly is Charles Barthud. He is a bass player, but he's also got a pretty good sense of humor. But mainly, he is just a very, very good bass player. So here's what that sounds like.
Okay, stop. Okay, so that was great, but you're still showing off a little bit too much. I was hoping it wouldn't come to this, but it's the only way you're going to learn not to show off. I'm going to need you to play Seven Nation Army. Seven Nation Army? No, please, anything but that. You need to do this and be rid of your need to show off once and for all. Fine. Pull it back. That's better. No, don't do it.
As you can tell, he is a very, very good bass player. Let me know down in the comments section what you thought of this video. Definitely like and subscribe if you got any value out of this video, and have a great day.